Mandatory tax registration. This article sets out the legal obligation for persons and businesses to register for VAT, tax registration, in the UAE under specific conditions. It explains who is required to register, under what circumstances they must register, and the deadlines for notifying the Federal Tax Authority, FTA, about their VAT registration requirement. The purpose of mandatory registration is to ensure that all businesses operating within the UAE's VAT system are properly registered and legally accountable for charging, collecting, and reporting VAT to the tax authority. This ensures fair tax collection, reduces tax evasion, and ensures proper tax compliance within the UAE's tax system. 1. Mandatory registration for persons with a place of residence in the UAE or in an implementing state. Explanation. This section applies to any person or business that has a place of residence in the UAE or in any other implementing state, a state that has a VAT implementation agreement with the UAE. These persons must mandatorily register for VAT if they meet certain supply thresholds. A. Registration based on historical supplies. A person must register for VAT if the total value of their taxable supplies, as defined under Article 19 of the Decree Law, has exceeded the mandatory registration threshold within the previous 12 months. This threshold is set in the executive regulation, ensuring clarity on the exact amount. Rationale. This ensures that businesses that regularly engage in taxable activities are properly registered, allowing the FTA to track and collect VAT from ongoing business operations. B. Registration based on expected future supplies. A person must also register if it is expected that the total value of taxable supplies, again, defined in Article 19, will exceed the mandatory registration threshold within the next 30 days. This requires businesses to forecast their upcoming taxable activities and register in advance, even before actually exceeding the threshold. Rationale. This ensures businesses that are on the verge of exceeding the threshold become compliant proactively rather than after the fact. It prevents delays in tax compliance and avoids gaps in VAT collection. Important note. The mandatory registration threshold is a set amount defined in the executive regulation, which can be periodically updated. Both historical supplies, looking back 12 months, and expected future supplies, looking forward 30 days, are considered for determining mandatory registration. 2. Mandatory registration for non-residents making taxable supplies in the UAE. Explanation. This section applies to persons or businesses that do not have a place of residence in the UAE or in any other implementing state. Such non-resident persons must also register for VAT if they engage in taxable activities inside the UAE and no local party is responsible for VAT on their behalf. Conditions requiring registration. A non-resident must register if 1. They make taxable supplies of goods or services inside the UAE. 2. There is no other person within the UAE who is responsible for accounting for the VAT on these supplies, for example, through the reverse charge mechanism, where the UAE-based buyer could account for VAT instead. Rationale. This ensures that non-resident businesses directly involved in UAE taxable transactions are brought into the VAT system, preventing them from operating outside the tax net. This rule is particularly important for cross-border service providers, foreign suppliers, and international traders, ensuring they have equal tax treatment compared to UAE-based businesses. 3. Time frames and deadlines for registration notification. Explanation. Once a person or business becomes liable to register for VAT, they must formally notify the Federal Tax Authority, FTA, within a specified period. Key time frames and requirements. The exact deadlines for notifying the FTA and submitting a registration application are defined in the executive regulation. The executive regulation also defines the effective date of registration. This is the date from which the person is legally considered a taxable person and must begin charging VAT on their taxable supplies, issuing valid tax invoices, collecting VAT from customers, filing regular VAT returns and paying collected VAT to the FTA. Why timing matters. Delays in registration notification could result in penalties or backdated VAT obligations. Businesses must ensure they understand the thresholds and monitor their turnover regularly to catch registration triggers early. For more details, contact us.